Good afternoon, everyone. My name is Maurya Hanspal, and here we will continue our sessions on wealth management and talking about the risk assessment of the people. So, in the previous session, we talked about the three kinds of people in the stock market or any of the market, basically, not particularly about the stock market, but any of the market. We talked about the first category of investor. That person is called a risk taking investor, or a risk tolerant investor, or a risk loving investor. So that person invests at least 80 to 85% of the amount into the equity market. The second category that we talked about was about the debt, was about the risk averse investor, or a risk intolerant investor, or a risk non-loving investor. So that person is a person who invests at least 80 to 85% of the amount into the debt instruments or fixed income instruments, be it your bonds, your debentures, your commercial papers, your certificate of deposits, your national savings certificates or public provident fund, any of the scenarios, your treasury bills, treasury notes, treasury bonds, fixed deposits, any of the things. Then the third scenario, somewhere in between, we have a risk neutral investor. That person is also called as a moderate investor. So that person combines the strategies of that person basically combines the strategy of both the risk averse investor and a risk taking investor. His goal is of both the risk taking investor of the capital preservation and growth, as well as the goal of a risk uh, averse investor, that is for capital preservation and a fixed income. Okay, so coming back to the next slide, let's talk about the risk profiling. So when we talk about the risk profiling, it says risk profiling is an approach to understand the risk appetite of investor. So basically, we want to know that how much risk the investor can take, and that is nothing but your risk profiling. It's an approach, it's a method or analysis to gauge or to understand that how much risk a particular investor can take in the market. Risk profiling is an exercise that determines the level of risk that an investor can take, as understood from the previous above definition also, and by my understanding, like when I explained you the differences between the risk tolerant investor, risk averse investor, and risk neutral investor. Third one, it is an assessment of investors' risk tolerance. We know it. Financial risk tolerance. Now you need to know that the risk tolerance or financial risk tolerance, it depends upon what? The financial risk tolerance, it depends upon the risk capacity and risk attitude. So basically, when we talk about the risk tolerance depends upon the risk capacity and risk attitude. Now, what do we mean by risk attitude and risk capacity? So in the next point, it says the risk attitude is a preference of the investor towards risk. How much risk that person can take. यहाँ पे एज नहीं आ रही, ठीक है, उसकी प्रेफरेंस है कि उसको इतना रिस्क लेना ही लेना है, चाहे उसकी जितनी भी एज है. Some investors may be unwilling to accept loss in invested amounts. This is an essential prerequisite to advise investors on their investments. Some may dislike varying payouts. Some may not like products that do not offer liquidity. So all these things are taken into like consideration. Like some people might want a considerable amount of return. Some people might want a higher amount of return. Some people might not want dividends, whereas like some people invest into the public sector companies only for the purpose of dividends because they give you a large amount of dividends. And some might say that they want some kind of liquidity in the securities in which they are trading. And by liquidity, I mean every buyer must have an appropriate seller and every seller must have an appropriate buyer. अगर मुझे अपने शेयर्स बेचने हैं तो सामने मार्केट में सेलर होना चाहिए. अगर सेलर को अगर मुझे शेयर्स खरीदने हैं तो सामने मार्केट में सेलर होना चाहिए. अगर शेयर्स बेचने हैं तो उसके लिए मैं बायर होना चाहिए. That is like nothing but the liquidity. And your market, it offers you the liquidity. You are like physical gold, your physical real estate, it offers you lack of liquidity because at some point of time, like you might want to sell a physical gold or your asset, like your real estate, your house, and you might not find a sufficient buyer for that. Okay, then the risk capacity. The risk capacity is nothing but your ability to take risk. Risk capacity is nothing but your ability to take risk. How much risk can you take? And risk attitude is nothing but your willingness to take risk. तुम्हारा कितना रिस्क लेने का मन कर रहा है. Okay. So risk tolerance depends upon risk capacity and risk attitude. A risk attitude is a psychometric attitude. So it basically means it's in your mind. Okay, that how much risk are you taking? So that you need to know. Risk attitude is nothing but the willingness to assume risk is a subjective factor which is difficult to assess. An individual's attitude to risk is influenced by his level of knowledge and experience with investment matters. Okay, मतलब कितना आपको knowledge है, कितना experience है for the purpose of investments. Because ultimately your equity, bonds, commodities, forex, crypto, all these are your investments only. Their risk attitude has more to do with the individual psychology than with their financial circumstances, right? Because it basically depends upon your psychology, not on the basis of your financial circumstances. Some clients will find the prospect of volatility in their investments and the chance of losses distressing to think about. Others will be more relaxed about those issues. Risk tolerance is typically measured using questionnaires that estimate the ability and willingness to take risk. A questionnaire दे देंगे, maybe in the form of an online form, because now the world has gone to digitalization, IT and all चल रहा है, और maybe in the form of an offline mode. अगर तुम बैंक में जाके अपना risk profile check करा रहे हो, वहाँ पर they'll say you have to fill all these details. Now, generally speaking, a client with a higher level of wealth and income relative to any liabilities they have a longer investment term and will be able to take more risk, giving them a higher risk appetite. अगर पैसा आपके पास ज़्यादा है तो आप एक लॉन्ग टर्म व्यू मार्केट में रख सकते हो एंड हम ज़्यादा रिटर्न कमा सकते हो. बट दैट थिंग आई believe is not completely correct, because even the persons who invested just 500 rupees per month, in the long term they accumulated a huge wealth. A large number of people say that the lower middle class people and the middle class people are not able to accumulate huge wealth because basically all of their money goes in these kinds of investments. They cannot put their money into these kinds of investments, and the large amount of money that they earn, like maybe in the form of a salary or any other income, goes towards like sustaining your family. For at least 500 rupees per month, you people can save, and that 500 rupees can be increased year by year as you get some increment per year. So that can be used for that. That's a myth which I believe. So इस वाले point को ज़्यादा ध्यान मत देना. In case you do not have any wealth and you people get demotivated, that in this PPT slide in the first point is written that the people who have a higher level of wealth and income can have a longer investment term. People who also have a lower amount of wealth and income can also have a longer investment term, and it is not always that a rich person like invest in market and a poor person basically who does not have money to invest into the market cannot invest. Anyone can invest in the market. Maybe you have 200 rupees or 500 rupees, lakhs of rupees or crores of rupees. Anyone can invest into the market. And each investor may have a different response to a risky situation and may choose to avoid, mitigate, directly deal with, or actively manage risks. Because everyone has a different appetite, a different kind of perception about the market, and on the basis of that, he invests into the different kinds of instruments. Okay. And different investment products have various levels of inherent risk, as told you in the previous sessions also. Equity will have a larger amount of risk. Crypto market will have the super amount of risk. Bonds, a very less amount of risk. Commodities, higher amount of risk. Even a forex market also, higher amount of risk. Risk profiling is an approach to understand the risk appetite of investors. We know it. This is an essential prerequisite to advise investors on their investments. We also know it. The investor advice is dependent on understanding both aspects of risk appetite and risk tolerance, like he has to see, basically. Young investors are capable of taking higher risk. I told you in the previous session about the age at which people pose. But the circumstances also need to be taken into consideration. There are likely to be lower claims on their income and able to save more. They may have long investing horizons and high preference for growth assets. Now, this line particularly says, the second line is the first point. After the full stop, there are likely to be lower claims on their income and able to save more. If a person has taken education loan or has some like great amount of responsibilities, how this person is able to save more then, right? Investors with young dependent families are usually less able to take risk. जिनकी उनके पर family dependent है, they are less able to take risk. The ability to save may be low because of higher expenses on setting up home and family. They may have uncertain investing horizons, high liquidity needs, and a combination of growth and income assets might help them. That's basically a moderative to conservative view. Investors at a stage where income levels are high and expenses have stabilized are considered to have a higher risk-taking ability. Again, a person who is mature, has accumulated a certain amount of wealth, has a stability of income, can invest into the stock market also. Our savings are likely to be high at this stage. They may seek long-term growth assets to accumulate wealth. Now, retired investors seek regular income, shorter investing horizons, and low risk portfolios. They're keen to distribute their wealth and like protection of their wealth from capital erosion. Because ultimately, if a person has accumulated crores of wealth, why that person will take risk of investing into the stock market? That person can have a moderative to conservative view, because at that time he will not be able to absorb a loss in his wealth. Then an investor with a short or medium term horizon who is unwilling to take risks but capital and likes regular income may be used to fit a conservative profile. I told you about that. An investor with a longer term investment but with a need for both income and growth. Now he needs both income and growth. That is both capital appreciation and fixed income. He might be for a moderate risk tolerance. And the first horizon, you had a person who wants to preserve his capital and wants a regular income, and that was a conservative profile. And now comes an aggressive profile, a risk-seeking investor with a longer-term investing horizon. His focus is on growth and tolerance for short-term loss. मतलब growth है and he wants basically the value to appreciate. उसने जितना invest करा है, his value must appreciate. So that's an aggressive profile. Now investors close to retirement see the risk tolerance coming down. They're closer to the distribution stage in their life because they have to pass on to their youngsters and other people in the family and seek a reduction in holding period and a switch to income from growth. Okay. Now these three kinds of investors we talked about. The first investor is a conservative investor. Do not like to take risk with their investments, typically new to risky instruments. Okay, they prefer to keep their money in the bank or in safe income yielding instruments. May be willing to invest a small portion in risky assets if it is likely to be better for the longer term. Then a moderate investor, somewhere between the conservative investor and aggressive investor, may have some experience of investment, including investing in risky assets such as equities, understand that they have to take investment risk in order to meet their long-term goals, are likely to be willing to take risk with a part of their available assets. Then you have an aggressive investor. Our experienced investors have a huge range of investment products in the past and who may take an active approach to managing their investments. They're willing to take on investment risk and understand that it is crucial to generating long-term return. Willing to take a higher risk with significant portion of their assets. That's what these people are doing in the market. A conservative investor is something who is a risk-averse investor, who is lesser keen towards equity, only want the fixed income instruments only. Aggressive investor is a risk-loving investor, a risk-taking investor, a risk-tolerant investor who wants to take a risk in the market and he's more focused towards the equities. And a moderate investor is somewhere in between. Okay. And like these things must be like known to you in a very easy fashion. Okay, so that is something which must be known to you as well. Give me a second. Yeah, the action is fine. ठीक है, आगे बढ़ते हैं. Now they have talked about some of the factors affecting the risk appetite of a person. These are the factors on the left hand side. On the right hand side, you have the influence on the risk appetite. Okay. So on the left hand side, it says the earning members. Risk appetite increases as the number of earning members increases. Like for example, if you are earning, if your wife is earning, your other family members are also earning. In that case, your risk appetite increases because you have like more amount of money coming up into the family. But if just you are earning, it can be a problem for you at a certain point of time because you might not be able to save more. In that case, your risk appetite might reduce. Then dependent members. If you have dependent members, risk appetite decreases as the number of dependent member increases. If someone is dependent upon you, your mom, dad, your wife, your children, in that case, you might take a lower risk in the market because you want to save your money. But अगर कोई dependence नहीं है, you can't take risk. Your life expectancy. Risk appetite is higher and your life expectancy is longer. तुम यंग हो, तुमको लग रहा है कि तुम 60 साल तक जियोगे, तुम 70 साल तक जियोगे. In that case, you can take a higher risk or can move towards the equity market. But if you are like 60 years of age or 70 years of age, you do not have a longer life horizon. In that case, you cannot take a large amount of risk in the market based on your age as well. Employability, lower the age, higher the risk. See, well qualified and multinational professionals can afford to take more risk. Why? Because the nature of job is high and they have the fixed employment as well. Okay. Then you have higher the capital base, better the ability to financially take the downside that come with the risk. अगर आपके पास पैसा ही नहीं है और आपने मार्केट में वो लगा दिया मुश्किल से और वो पैसा डूब गया, सब कुछ डूब गया, बट इफ यू हैव द मनी विद यू ऑल्सो, इवन आफ्टर इन्वेस्टिंग इन द स्टॉक मार्केट एंड वो डूब भी जाता है, स्टिल आपके पास एक लिक्विड कैश होगा अपने पास. So that is the scenario. And when they talk about the regularity of income, so by the regularity of income, it means the income is regular. स्टेबल जॉब है, पैसा आ रहा है, तो यू कैन टेक सम रिस्क इन द मार्केट. बट अगर वो रेगुलर नहीं है, तो फ्रीलांसर हो वैसे हो, सो इट कैन क्रिएट अ प्रॉब्लम. Then factors influence our risk appetite. Employability, well qualified and multi-skilled professionals can afford to take more risk. Nature of job. Those with steady jobs are better positioned to take risk knowledge about the markets. A person who is better informed about the market is in a better position to take market risks than someone who is ignorant about them. Psych daring and adventurous people are better positioned mentally to accept the downsides that come with the risk. Then financial information which जिनके पास है, think that they're confident enough to take the risk in the market and invest more into the market after the research analysis, be it the fundamental or technical analysis, can take more amount of risk. Capital base, higher the capital base, better the ability to financially take the downsides that come with the risk. Then the regularity of income, people earning the regular income can take more risk than those with unpredictable income streams. Then factors affecting the risk appetite. Family information, earning members, the risk appetite increases as the number of the earning member increases. Dependent members, risk appetite decreases as the number of the dependent member increases. The life expectancy, risk appetite is higher when life expectancy is longer. Personal information, age lower, higher the risk that can be taken. Okay, so these things you have to take care while you are doing the study. These factors we talked about, see. The others, see some of the factors that we see. Or like factors of life cycle, characteristics, family background, work experience, or gender, age, potential profitability of client behavior, going to college, getting married, having children, or retired. But delegators, low involvement, your participators, hobbies, selectors, sophisticated investors, ultra high net worth investors. Okay, so these things can also define how much you are like investing in the market. Different instruments and preferences are there, this we talked about. Now there can be some behavioral biases because creating and managing a portfolio at the level of the fund manager or the investor requires investment decisions to be made on which asset class to invest in, how to invest, timing of entry and exit, reviewing and rebalancing the portfolio. These decisions have to be based on the analysis of available information so that they reflect the expected performance and risk associated with the investment. So all these things have to be taken into consideration as well. Right? Very often the decisions are influenced by the behavioral biases in the decision maker, which leads to less than optimal choices being made. Okay. Now you have to see the behavioral biases in investment decision making. So these are some of the behavioral biases, which also lead to like some of the variations in technical analysis also. Okay, so these things also you have to take into consideration. Okay. So like some of the biases, like when we talk about, we have the optimism or the confidence bias. So what exactly is happening in the optimum or the confidence bias? You are like overconfident about the market. You think if your investment kind or your investment decisions in the past, they yielded you a certain amount of return, and that return was very high for you, and that was just a guess on your part. So you think that you are getting overconfident, you are optimistic, and you think that the next investment decision you will take in the market will also be correct. So that something can lead to your overconfidence biases or something when you are over optimism. So it says investors cultivate a belief that they have the ability to outperform the market based on some investing success. Such winners are more often than not short term in nature and maybe the outcome of just a chance. By chance, I mean it is just a chance and not a skill. Okay. If investors do not recognize the bias, they will continue to make the decisions based on what they feel is right on an investment objective. So these things are also there. So if you think that your past decision about picking up of any of the investments, be it your stocks or mutual funds or crypto, because like this thing, this overconfident bias or this optimism bias, it happens more in the crypto market because sometimes people buy it and the market goes on a boom. बहुत मतलब कि प्रॉफिट लोग कमाते हैं बट समटाइम मार्केट गिर भी जाती है ठीक है एंड गिरती ज्यादा तेजी से है बढ़ने से in the crypto market. Then they have the familiarity bias. In the familiarity bias, it basically means you are like familiar to some industry. Like for example, you think that you know about everything about the pharma industries, or you know everything about the fast moving consumer goods industries or the metal industry, and you think that this is the only industry that will do best and the other industries are just waste. That can also create a problem for you. This may be an asset class they're familiar with, stocks or sectors that they have a greater information about, and so on. Investors holding on real estate portfolio or a stock portfolio, तो बेसिकली तुम एक पर्टिकुलर सेक्टर पे फोकस करो या एक पर्टिकुलर तो मार्केट पे फोकस करो, सो दैट कैन क्रिएट अ प्रॉब्लम इन द familiarity bias. Then have the anchoring bias. Investors hold on to some information that may no longer be relevant and make their decisions based on what new information is labeled as incorrect. So anchoring basically means the information that is as per your biases, the information that you think is correct according to you and can be wrong as per the other people. So all the negative things that you hear about the own stocks that you have purchased, you tend to ignore that or you tend to neglect that. So that can create a problem. Okay. Then the loss aversion. So loss aversion, as I told you, the person who has the fear of loss, वो लॉस से डरते हैं, तो वो क्या करते हैं, अगर मार्केट थोड़ी सी भी करेक्ट हो रही है ना, वो शेयर्स को बेच देंगे. So that is a basic scenario. Then you have the herd mentality. So what happens in the case of the herd mentality? If someone is saying you something that this stock will do good or this sector will do good, you listen to that person, and once you like listen to that person, you buy that particular stock of the company. So that is one thing, and that particular stock might not do well. Recency bias. It basically means the sectors that have performed well in these time period, the initial time period. Like for example, the pharma sector, the IT sector, like they performed good in the COVID pandemic. It is not mandatory that these sectors will also perform good in the future as well. So that is the recency bias. Then you have the choice paralysis. So choice paralysis is something you get confused कि कौन से सेक्टर को हम चूज करें, हम कौन से सेक्टर में कब एंट्री करें और कौन से सेक्टर से कब एग्जिट करें. So it says the availability of too many options for investment can lead to a situation of not wanting to evaluate and make the decision. Too much of information also leads to a similar outcome on taking decision. बहुत सारी information आपके पास आ गई है and you basically get confused कि हम क्या करें. इतनी सारी इन्फॉर्मेशन आ गई, तो मतलब कि देन यू थिंक कि इतनी सारी मतलब इन्फॉर्मेशन तो आई गई है, तो सारा पढ़ने से अच्छा है कि इग्नोर दिस इन्फॉर्मेशन एंड इन्वेस्ट एनीवेयर, रैंडम बेसिस पे तुक्का मार के. और these are some biases that are commonly observed in investment decision making. Professional fund managers have systems and processes in place to reduce or negate the effect of such bias. The checks and balances exist from the stage of gathering information to interpretation of the information and decision making on entry and exit. So these things are also given that we need to take into consideration. So these kinds of like behavioral biases we talked about. So you can create a portfolio in such a way. You can have some components. See, they have said कि life cycle दिया हुआ है कि mid-20s and late-30s and mid-50s and late-60s. जैसे आप 60 में जा रहे हो देखो कि 50% बॉन्ड के टुवर्ड्स हो गए, एंड जब आप mid-20s में थे स्टॉक्स की तरफ 65% हो गए, एंड जैसे जैसे एज बढ़ रही है वो स्टॉक का प्रपोर्शन कम होता जा रहा है. जो सोफिस्टिकेटेड HNI जो होते हैं, हाई नेटवर्थ इंडिविजुअल, जो करोड़ों मार्केट में इन्वेस्ट करते हैं. ओके, that is one thing. These people are like investing into market in crores and all. Okay, banking, asset management, alternative, other investments. Then they've talked about the asset allocation basically. You don't put all your eggs into the one basket. Okay, so basically अगर वो बास्केट गिर गई तो सारे अंडे टूट जाएंगे. Similarly, एक ही स्टॉक मत रखो अपने पास, अपना पैसा एक ही स्टॉक में मत डालो. ट्राई टू डाइवर्सिफाई इट, कि अगर एक सेक्टर नीचे गिर भी गया तो दूसरा सेक्टर ऊपर उठ जाए. Okay, so this thing you have to take into consideration as well when you are doing it. Like for example, let's take a basic example. If like before this COVID-19 pandemic, if anyone would have invested into the hospitality sector, so during this pandemic when everything was closed, shutdowns were there and there was no travel and tourism, this sector witnessed a decline. And the prices of these shares were in negative, मतलब कि losses में, and the value of the portfolio like would have turned into zero or negative. Okay, but if anyone along with this अपना पैसा सिर्फ एक एग में ना डालकर और जगह भी डाला होता, रियल एस्टेट, फास्ट मूविंग कंज्यूमर गुड्स, metals, IT, which were on a boom, his portfolio would have still given him returns. So that is one thing which is also taken into consideration, like by the asset allocation. Now the asset allocation can be strategic, it can be tactical, and it can be dynamic. So by strategic asset allocation we mean कि long term asset allocation है, कि long term आप मार्केट में इन्वेस्ट कर रहे हो. टैक्टिकल होता है कि टाइमिंग के साथ तुम चेंज कर रहे हो, एंड डायनामिक एसिड होता है कि बाइंग एंड सेलिंग बहुत हो रही है. ठीक है, बाकी इसके बारे में हम और जानेंगे इन द नेक्स्ट सेशन. दैट्स ऑल फॉर टुडे.